This one is about not just outside the insurance industry, but maybe outside your company. What would you benchmark that you would bring in is the real question. Because this has been applied in many other areas, of course, already, and banking's an obvious one, and other industries. So that's the question.
Well, actually, my background is more in banking. So maybe I can help look at that. Actually, what you see taking place in banking is very similar to what you see taking place in the insurance industry, where banks are trying to move away from large distributed applications to more centrally controlled internal infrastructure, which for them is a massive problem because they have millions of systems. And around that, they're looking at key things, and the key things that the banks are looking at are customer as being an entity, product, I'm going to offer many products to that customer, and account. And by taking those three very simple concepts, you then have a huge amount of power to offer many different services and many different products to your client. So it's the organization of that internal infrastructure around those three key concepts that is going to deliver a huge amount of power to the banks. But in doing that, it's a very complex process. So it's around customer, entity, and account, and then by grouping them together, you will have huge amount of information about millions of clients that you can offer millions of services to. But that's the key concepts.
I think the value is in those sectors where the companies are able to get more of the behavior of the customers. For instance, in retail or all these club cars for giving fidelity for the customers, you are getting lots of information. In web applications, you are getting also lots of information. So taking value from this sometimes is giving you rewards for the customer. I think it's a matter of my data, my behavior, how I doing my consumers is giving a lot of value to the owner of the data. So please, as a customer, I would like to share some of the benefits, and the customers are seeing the benefits in this area. We are more focused on fintech. Maybe it's not, well, they have lots of information. For instance, in credit cards, one of the values that banks are getting is when some retail chain wants to install a new store, they may be asking for the bank where is the address of the consumers of this particular chain store. So there are lots of information that maybe in insurance is not as the place where you can have the information. But if you combine fidelity information from banks, credit cards, all the data that the users are willing to provide to you, I think is the way to go, to share the benefits with the customer. Before, someone asked, are you willing to provide your telemetry information? Well, if I get value from this, otherwise, maybe not. It's a matter of how do you value your privacy. If there is one company that is giving you £100 a year for giving all your data, so maybe you can value your privacy in X or Y or Z, and you might be willing to provide more information to your company. So I think the key is the availability of data. You have to be able to collect all the data and to know where you can invest the effort of analytics in this data.
So I think actually mass personalization is quite well established in various places. And one example I think is quite interesting is Google in terms of kind of a trade-off between privacy and utility. So if I'm a user of Google, as I imagine everyone is here, and it's an interesting business model in terms of what they're doing is mining my data every time I use any of their services and turning me into a product. But actually, why do I use it? Well, so looking at search results, as if I type my first letter of a query, Google will come up with something that's different to what anyone else does. So actually, I get some improved search, which has some value. Now, as a technologist, I have some serious kind of privacy concerns because but actually, I'm doing the same thing that all of us are doing. I'm giving away a ton of free data to various organizations, and Google, Amazon, whoever else is using online services is very heavily mining data, and they're built around that concept. Now, I think there's an interesting thing coming. I think privacy is probably going to disappear actually as a concept. I think the technology is going to kind of track everything that we do ultimately. But actually, I disagree with some of the points about that we heard earlier about kind of machine intelligence. I think that's kind of some way off, and I think all technology still needs to be driven. We need to look for a purpose, and technology will facilitate that. So, in retail, online retail certainly, in any online business, I think we've seen an established use of technology, and the mass personalization is interesting. Actually, I think that's also particularly interesting related to the comment earlier about behavioral change from insurance, because that's something where I could see that there can be a huge customer value in insurance being extremely bespoke. Individual insurance is in fact no insurance. That's if you've got an average risk across this is my completely outside insurance understanding, right? If you've got an average risk across a pool of people without specific items, that's kind of one end of the scale that was more traditional. We've heard a little bit about telematics in driving, but I think the really interesting thing, and kind of going back to my point about Google providing a specific service, is that actually there is some value in that it knows what I'm thinking more than I do, and that's helpful. But that can also can be used to change my behavior in a positive or a negative way. But in terms of insurance, the win-win is behavioral change. You're turning it into a service. That's my understanding.
So, you were talking about Google, PayPal, Amazon, lots of supermarkets, been doing this sort of data mining for decades and exceptional at it. So on that point then, and because this is all about innovation, is the insurance industry going to change from within, using innovators and entrepreneurs perhaps from Tech City, or is it going to be the Googles, the PayPals, the Amazons who are really going to change the insurance industry?
I think the Googles and the Amazons are going to change the industry. I don't think there's any doubt about that. And just to get back to that point that you made slightly about machines being more, that's a fact. They might not be in width more intelligent than a human being across multiple functions, but against specific applications, they will be very quickly. So I think without doubt, if we don't address the Googles and the Amazons, they're trying to conquer the world. They're spending countless billions of pounds mining data to get predictability and certainty around all aspects. And the big thing that they guys want is the financial service industry in general. So they will drive change.
I think what is happening is you should be trusting on Google or Facebook for being your insurance provider or your bank. I think the movement is banks are moving to being tech companies instead of Google being a bank or insurance. There are countries where there is no established financial industry. For instance, in some countries of Africa, the telco companies are providing also they are working as a bank. You can pay. For instance, in Kenya, you can have more payments by the phone than in every Western country, because there is a lack of bank or insurance industry, so they are trusting on what they have first. And there is no ATMs in the street, but everybody has, or almost everybody, a phone. So I believe the movement is not, Google is not getting, or these companies into this area, but the companies that want to survive are moving more to a tech companies. There is one bank in Spain that they are redefining ourselves as the new tech company, not a bank company longer.
I think it's interesting that actually if we look at banking, where technology disruption is ahead of insurance, actually banks right now, they're not destroyed by supermarket banks or Google Bank or whatever. And in fact, what people stick with, right? I still have a traditional bank, despite the fact that there are these challenges. And actually, the value is surely in the brand, right? And all banks are making a big effort in terms of kind of updating their image. But despite the disruptive pressures which have been acknowledged for, I guess, a lot longer than insurance, it's not in that industry. It's not the end of the world. So I'm not sure actually in terms of is disruption within or without. There's clearly going to be intense pressure, but I'm sure there'll be a mixture.
Interesting perspective on this.
First of all, insurance is going to be increasingly sold online. If it is being sold online, you can start thinking much more sophisticated about the buying process, meaning you can build statistical models of motivation. Is the customer driven by reputation, by features, or by price? Different customers will behave differently. How far are they in their buying process? Are they just at the point where they're comparing different providers, or are they just thinking about the possibility? To what extent they have visited your competitors? Really interesting way to drive differential pricing. And then there's a whole number of people who are thinking further. Given that our identities are in social media, what happens when you allow people to log in via Facebook or LinkedIn as a way of getting perhaps a better quote? There are really quite amazing things that take place when we start moving away from very generic propositions and back to the way it was in the old style market, where the seller knew how to take a good look at their customer and judge what they're worth.
John Short from Direct Line. So I guess one question is actually what role is regulation playing in all of this, and is it kind of stopping disruption taking place within insurance and banking? I mean, I have to say, having come from HSBC previously, I don't see the retail banks struggling. I don't see them actually changing much at the moment, particularly the big ones. I know there are new entrants coming in all the time. You look at what happened last week in America as well. So Simple, one of the big new entrants everyone's talking about, suddenly bought up by BBVA. I don't see that much disruption happening, and certainly within our industry, I think regulation, although regulation is suddenly struggling to play catch-up, has a big part in kind of either stopping disruption or actually making us think twice before we do any innovation.
Yeah, because the simplified advice stuff that came out, I don't know, at the end of last year recently, it seemed to be focusing on positive outcomes for the consumer, but then there was still that overhang of risk for the organisation. So you could be doing some sort of automated advice, but actually there might be a sting in the tail. So you're absolutely right. Regulation does seem to be the logjam. Does anyone else agree with that? Or
Take that next. I know you have a point on this.
And I'm a lawyer. Being a lawyer in this sort of space, that's my role in these startups. I don't necessarily. Before you get into whether or not regulations are blocky, again, you've got to go right back to what customers want to do, what's standing in their way, and so on, right? So it's no different to any of the other functions that are kind of affected by this. Two big areas, two big things I think for the insurance industry. One is a return to mutualism. So consumers insuring each other's risk, and what role the insurance industry could play in helping that happen. So peer-to-peer insurance, if you like. And secondly, imagine the big data tools sit on the customer side, yeah, and you're responding. You're not trying to find customers. You're responding to their devices, finding or looking for your product.
That's a great concept.
So to your point earlier, you talked about, I just want an insurance company who will tell me, give me the right product for me. Actually, I want an application that sits on one or more of my devices to keep me on the best priced insurance products every day. So
But
I don't care if
this
it's
concept's
switching.
this concept's a great concept.
I don't care if it's switching between providers, between products within providers, or whatever. Has anyone heard of the Cheap Energy Savings Club?
Oh yeah.
Okay,
Snacks as well.
so that's halfway to the sort of vision that
But what if the algorithm in your personal device and the advice it gives is bad? It turns out to be bad advice.
it's not giving advice.
Yeah, but it is because it's making choices on your behalf. That's advice.
It may not.
Well, how do you make a decision then?
So what?
How do you make a decision if it's not giving you advice and pointing you to a specific product?
It will know all of my data, right? And it will go around anonymously looking for data that maybe helps fill out a picture of my needs. It could be public data sets, it could be private insurance product data sets, it could be all sorts of other stuff. And then it will go looking for a product that will meet the needs.
I just want to say, I think most of the discussion we looked at on insurance has been focused on general insurance. And frankly, that's the easy thing to deal with, because that's the stuff that everybody deals with day to day. It's the cars, it's the houses, it's all that stuff. There's a life and pensions industry of which you characterise that. And what I'm trying to think of is, how do I describe the insurance industry, and how do I describe similar industries who have been disrupted? Are there any? Because I'd say that the life and pensions industry and the GI industry is characterised by scale. It has a huge amount of regulation attached to it, and it's complicated and people don't understand it. So you've got people like Tesco's and the challenger banks. Retailers, it's easy. You're not locked in. You can go to Tesco's, you can go to Asda, you can go to Aldi, you can go to wherever, and it's the one decision that you make on any one given day. For life and pensions, you make it and it might last 20 years.
Or annuities.
Or annuities. So the only industries I can see that are getting towards that, and I'm thinking off the top of my head in front of a lot of people, is things like, making a car purchase. In the car industry, where you at least have a car for 2, 3, 4, 5, 10 years, depending upon your tastes and your finances. But I don't see that, where has big data affected those guys? A little bit, not as much. So, characterising insurance, it's going to be difficult in the longer haul for them to really get to grips with L&P, especially, rather than GI.
But what you're seeing in the big banks, they've been, I got to disagree, big banks have been massively disrupted right now.
They're not the retail guys.
Well, they are.
Well, we've worked with most of the challenger banks, and actually, market share-wise, it's certainly not been an overnight bank.
No,
which you think is it comes down to brand.
I agree with that,
with
but there's still massive disruption taking place internally in the banks.
Internally, yes, but not for the customer.
Not for the customer. And what that means is banks are becoming more and more into utilities, right? They're becoming huge utilities, right? So that's what they're becoming, and the value that they perceive by the customer is becoming less and less.
Yes.
As a result of the fact that, so they're changing, although they're not losing market share, but they're changing.
Well, believe you me, I'd love them to have switched and gone. The pillar banks have gone, we were wrong, our model's wrong. We've got to think more about the customer, and brand means nothing. And the same thing goes for insurance. I'd far rather that the customer was really king. But frankly, most insurance companies don't know the address of most of the people that have customers.
And that's...
They don't, you ask them.
There is a massive disruption taking place. And the banks, and they're spending, they're not spending tens of millions or hundreds of millions, they're spending tens of billions to try and untangle the mess that they've created in town. These big 6 banks in the UK are going through massive re-engineering programs to take the 10,000 applications they've got and get them back to 3 consents so they can provide cheaper service to their customers. And the disruption you will see, I suppose, going forward is which small building societies will be able to survive, or which small banks will be able to survive offering mortgages or offering other, so because these are becoming utilities. And so there will be disruption, but there won't be a further bit. It's going to be difficult to see a lot of the medium-sized and small-sized players.
Oh, big disruption.
You can see nationwide today is sweeping up the market.
Incremental disruption. No, massive.
Okay, all right. That's a great start. I think we need to move on. Right?
One point here. There's an important point about different parts of the market. You know, life and pensions is very different from GI, but in life and pensions in itself, that is separate markets. So within that, the protection part of that business is more akin to the GI market in terms of use of data, whilst the life savings market is becoming not an insurance product. And indeed, there are disruptors in that area in the form of Hargreaves Lansdown, which has made a big difference in that space.
Thank you, guys. Thank you, Mark, for that. Okay, we're gonna, Mella, would you like to tell us what you want? We're gonna do a breakout session now. Mella's gonna tell us how we're gonna rearrange this place.